Well, hello, welcome. That's right, Joe with you here. I'm going to spend just a few minutes and kind of break down. We're going to go find ourselves a trade according to what the markets are, play a little bit of a top-down approach, analyze a spread, and place it. We're going to do it in Thinkorswim. You know, you guys can do it in Interactive Brokers as well. Just depends. I just like the Thinkorswim because it's really going to kind of open your eyes on what to look for and what to kind of measure up against when it comes to how these behave. We did do a think back class on these, and the emphasis was how important it is for these to actually decay versus even just reaching your price as well. It's a very, very big component of it that's often overlooked. So we'll analyze it and see what it looks like. Now, guys, this is just a trade I'm going to find by the time you see this class. The trade will be irrelevant. Maybe it isn't. It doesn't make a difference. Just if you follow along, just make sure you know what you're doing and take responsibility for it, especially if you see this class in about a week. Let's not try to mimic this trade, right? Too fun. All right, enough of that. Let's jump straight into our Thinkorswim platform. I cleaned out my paper trading here so we could just build something kind of fresh. Here's the S&P. So we'll just start with our little bit of a top down. As you guys may have been following, once again, I don't want to date this class, but hey, it's a lab, so they are dated. There's no way around it. But it's been a little bit of a tumultuous ride over the last few days. A little extended, talking about tops. Decent volume here on some corrective action, and it looks like we might roll over, but we're hanging on again. So you could see that Thursday of last week, it held. Monday we popped up, and then we got Tuesday, Wednesday, and today it looks like it's holding up again, just trying to pin itself on that 50-day moving average. So we'll see what happens. So I'm sideways on this, meaning my top-down approach, I'm zero on the markets. I'm fine doing a bull or bear then when it comes to looking for bias. I'm not going to go too deep into scanning for sectors or anything because that might take a little bit. So let's go through some charts. And as you may have known, I have already found one. This is BAX. I got this from one of our wonderful traders in my Wednesday class yesterday, actually. And I liked it to the bear side. I think it's a neat one. Descending pattern here, lower highs, lower lows. Bear rally, I should say, that went up, revisited moving averages, still setting a low. Let me get my pen so you can see what I'm talking about. So here's our pivots, and I like this, right? So decreasing here, broke a neckline there. It's kind of neat when they break and then they retest that same area. It looks like it's rolling over. Got a pretty good target right around this area here. So we could shoot down for maybe that 75 mark. Now, a couple things that I have on mine, if you guys don't. Ooh, I'm using the color black, so that's not going to show up too well. Let's change it to an annoying pink. A couple things that I use is the ATR. I like just at a gander. It's posted here and there, just to know kind of what to expect when it comes to the stock moving up and down and how fast it can go there. And that's about as deep as I get. Now, you can run deeper calculations if you really want to, but I just take a look at, okay, this moves about $1.40 a day, and I've got myself pretty much, I go from the channel. So between here and here, obviously, I'm not going to enter there. I'm going to enter right here with the target of here, but still, that's range about $3. So yeah, but we'll call it $3. So it's that can hit that in a few days. This is probably something I don't want to do much longer than maybe 10 days. 10 days is actually a little bit much. More like, I don't know. Between a week and a half at most is what I would look for on this. So that's my time frame. Now, guys, I just walked you through that, kind of bumbled my way through there. But it's super important that I get the time frame that I want. If I get into this option and I have the choice of 1 day to expiration or 30 days to expiration, I will not choose the debit spread. Okay, guys, I want you to know that I will not choose the debit spread unless I get this specific time that I need. I know I can choose any strike prices I want, but if I cannot get my time, I will look for something else. Diagonal, targeted butterfly spread, or straight puts. I will look for something else. If I cannot get, I'll say it one more time, the price that I want, or excuse me, the date that I want, I won't trade the vertical spread. Keep that in the back of your head. And guess what, guys? It does. I took a look before we started this class. So got ourselves a move from about, where is it at right now? $76.92, so about $77 down to, let's call it 75 bucks. We'll see what kind of strike prices we have. And I'm looking about 5 to 10 days. 5 to 10 days. So analyze. Now, here's something kind of fun, folks. Did you hear me walk through and write down? I should be writing this down. Maybe I will here in a second. Everything I wanted to do. My test is done. And I hadn't even opened the options chain yet. Right? Too often the chicken directs the egg, or I should say the tail wags the dog. Too often. My traders will go directly to the options first and then go back to the chart. That's the tail wagging the dog. You need to understand that options derive their values from the stock. Do test first, then take a peek. And I'm pleasantly surprised. I've got all sorts of strike prices. Looks like I got 50-cent increments, and I've got all sorts of expiration dates week to week to week. Now I'm excited because, if I didn't have that, then I would probably have to go back to the chart, take a look at it again, and try to implement something else that is a -1, -2 outlook, like a diagonal spread or a butterfly or so on and so forth. So there's your first lesson with the lab. Test first, then options chains. So you can see I've already been perusing it, but let's go ahead and close. We've got the 5th of March, which is tomorrow. We've got the 12th, which is 8 days out, and we got the 19th, which is the regular expiration cycle for the month, in about 2 weeks. Well, that's pretty sweet because it's right about my sweet spot, around 8 days. Definitely going to start here. Now, the next one, guys, according to the rules of the debit spreads, for you guys who are just coming off of the classes or have got a worksheet in front of you, we're looking for a delta of 55 or higher. So I'm just going to go immediately there. It looks like it's this, 0.57. The other one's 0.51. And we can toy with this. 55 to 51. We'll play with a couple of these. But let's start with the 77.5. And then what was our target on this, guys? Let's go back to the chart there and remind myself. Ooh, 75. We could also maybe do a 75.5. But since I'm giving it 8 days instead of maybe 5 days, I might open it up to 75. Now, what makes that decision? I don't care. Preference. I mean, as long as we're doing the rules the same, meaning what you'll see, position size for max gain, max loss, and hold it till expiration, it doesn't make a difference about that choice of 50-cent target. It's all going to be based on your expiration availability. Start there. Remember, expiration on these is crucial. So let's do the 77.5, 75. We'll take a look at the 77.5, 75.5. And then maybe if we've got some time or we're really bored, let's see about tightening up that, going from the 57 delta to the 51 delta, trying to 77, 75 as well. So let's start with our rules first. To create these, you just get the buy. You put your mouse over there, just regular click on it, drops it down here. Then since I want to combo this, I have to hold down my control key, roll it over my 75 and click the sell button. And you can see it's combined a vertical. Kind of a Thinkorswim tutorial as well here, guys. And that's a lot. Let's do, looks like it's about $1 here. So I can already start to play with this if I want to. Let's say that I'm going to do a max of $500 risk in this trade. It's easy to do with $1 there. I'm just going to knock this down to 5 contracts. We can start playing with this bad boy. Okay, so once you get this initially in, I can go to the risk profile here and it builds this. Okay, we can change it from here. We know that we wanted to look at the 77. We wanted to look at the 75.5, so on and so forth. So let's do some breakdowns here. Now this is going to be moving. It's at $1.03 right now. It's going to move as we talk because this is a live market. But we can start to analyze it. We're going to risk about $1, and it looks like we're going to make about $1, right? Or a little bit more than that. What's $1? What is that? 77, $2.50. Sorry, risking about $1 to make $2.50. That's awesome. That's a 2.5 to 1 risk reward ratio. That would be fine, and you could probably just straight up go for it. That's cool. However, this is a lab, so let's toy with a couple of more options. Now, I'll tell you another thing is, as soon as I drop this down to 77, it's going to look a little sweeter, isn't it? Now we've got 70-cent risk to make the difference there. What is that? $3, 5, 6, 7, $2. 70 cents to make $1.30. So the risk reward on there is not quite 2 to 1, right? But people might say it's only 70 cents. Doesn't matter because I'm going to click this up to where I'm risking investing the same $500. So keep that in mind. Okay, so the risk reward is better, definitely, on the 77.5, 75. And you guys might say, well, that's obvious, Joe. It's a little bit wider of a spread. Plus, it gives us a little bit more advantage when it comes to the delta because we're deeper in the money with the 77.5. So let's go back to that. What was the other one? Oh, let's knock it down a little bit. Let's just go to, what was it, 75.5. So let's lower our target, right? Let's not reach all the way out there. 77.5, 75.5. Now we're back to that $2.90. Okay, so it costs a little bit more. The sweet spot seems to be where we started, the 77.5, 75 target. The 77, 75 was 70 cents, but the risk reward wasn't as good. Hopefully you guys are keeping up with me. I'm saying 7 a lot. I apologize if it's a little annoying. So that's all I do. That's how you do this. You just start to play with it until I get, now personally, folks, I'm just looking for the best bang for the buck. And it appears to be opening it up to the 75 and buying the deeper delta. It's only 0.06 extra delta, but it's going to give me over 2.5 to 1 or 2 to 1. So I like this one the best. Easy, right? Go ahead and trade it. Let's analyze this. Because one thing that I like is let's do our day step. Now let's see, 4 days step. This thing's only 8 days apart, so let's do it every 2 days. Ooh, that's going to be nice and sweet, isn't it? Okay, so understand that this is every 2 days. And the closest to expiration we got, it looks like, was on the 12th. I could maybe knock this down to 1 day. We get there maybe 3 days. Now let's just do 2. Okay, so I'm going to zoom in on this bad boy a little bit. Try to, at least. Oh, yeah, there we go. Drag it in. All right. It's kind of gnarly, right? Looks like it just. So what I want you guys to see is, and this curve doesn't quite get there because it's not to the expiration date. But look at the difference. What was our target? 75. All right. Look at the difference in the line spacing of the 10th versus the 12th. You see this? This is what I'm talking about. This is the stuff that makes this pretty difficult because all these are pretty tight, right? You got the purple line and so on and so forth. These are 2 days apart. You got the 4th, the 6th, the 8th, so on and so forth. And you're not making any money. I mean, take a look at, here, let me circle this. This is the boxes that kind of represent the hypothetical price at the point. So keep your eyes on what I circled as I put my cursor over 75. All right. Oops, crap. Sorry, guys. I drew right over it. Let me make a bigger circle there so this pops out. We can see it. All right. So at 75 bucks, there's our breakdown. So 4 days, the 4th, the 6th, and the 8th, we are talking about literally $30 difference. Then it goes from the 8th to the 10th, and it's about 60 bucks. And then we go from the 10th to the 12th. Now, folks, understand that's not even the max because it would be the expiration cycle. That would be the 15th, right? Look at the jump. That's 150 bucks. Well, basically, to be specific, it's 100 and, well, now it just jumped, but that's a lot. It's a huge amount. And so when I talk about the time frame being important, the majority of your gain comes at expiration. It comes the last day or two. I wish I could try to scale this a little easier for us. Maybe if I go 3 days, do it 3. Well, that's a volatility. Sorry, guys. Nah, we'll just go back to it. Day step at expiration. All right. I think you get it. Yeah, right in between the break-even points, but or right even the expiration dates. So the idea is the emphasis of, hey, let's say that I get into this thing and my ATR is correct, and I don't want to wait for this. Let's go back to the chart. Let's say that we have, and this happens a lot, that this, post this candle on Friday, and then post this candle come Monday morning. That doesn't do anything for us. That's 2 days. Let's go back to what that analyze is going to show us. That is going to be at $75. That's going to give us, well, it's still $292. Less than half of what we could make at max. So it is, and I've got a lot of traders that say, well, I'll just take it there. Well, if you do that, why don't you just do the straight put? because you'll make a substantial amount more, and you'll be able to take it when it gets there. So it's imperative that you hold these things all the way to the expiration cycle. All right, I think I beat that in your head enough. And if I didn't, review this class. So the next thing to do is just go ahead and trade this and then hold it and see what happens. What else can we do? Why I do this? Here's a fun quick tip here. If you guys go ahead and right click on this, you can go to, I think it's create the duplicate order first, and then now you can play the bid and the ask. I'll put it down in here. This is actually giving me a very good midpoint. It's pretty wide, but hey, if I can get that dollar, I will. Actually, I should unlock it and see what it's moved. Let's go ahead and place this, and let's see if I can't find a bull. It's only been about 20 minutes. Okay, cool. So limit order, 5 contracts for $1, confirm and send. All right, let's get that out there working. And let's look for another trade. Now this is all going to be just off of me talking to you guys because I haven't looked for bulls, but I have a nice list. Let's take a look at them. Here's OLN. This is a pullback. Doesn't look like it's triggered yet. Here's ALLY. Yes, folks, these are from Wednesday's class. IVZ. Looks like it's about ready. We could probably play with that one, but I don't think I'd send it. It hasn't confirmed yet. LYFT. Left a nice little, look at this. Little, oh, by the way, we got filled. That's a nice little breakout. These are actually pretty good vertical spreads. We maybe do a 60-65 on this. What do we got? An ATR that moves about, it's over here. They're about $3 a day. Yeah, maybe a 60-65. We'll try this one because I like it because it's in between, which means we might be doing the 60-65. We might be doing a 57.5. 65, just depends on what it gives us. So I'm going to say between here and here, this thing moves about $3. Let's do our test. I think that we probably don't want this to go much further than 5 to 8. Maybe we can get that same 8 days. I wouldn't want to go much more than that 8 days. So let's just see what it's got. Oh, look at that. It does give us those options. So we've got that. Let's see the strike prices. Ooh, we got dollar strikes. So let's go back to the charts and see if we can't get a little bit more funky with this. Let's see, like that 60. That's kind of nice. I don't know, guys. Based on just a projection, the 65 just kind of screams at me. That's probably the easiest bet. However, if we think maybe we can milk it, I mean, this did have a pretty good surge the last time. Maybe it goes a little higher and that comes back and retests the 65. We could open it up to a target of maybe 67. I don't know. Let's take a look. Going back to our analyze. It's going to start with our delta here. We've got to buy ourselves the, oh, cool. It's going to either be the 62 or the 61.5. All right. Well, let's see if we can do something a little bit more aggressive. Now, what do I mean by that? Directionally aggressive. So I got a 52 and a 56 delta. Either of these will suffice, right? Very close to 55. Let's go ahead and start with the 62. Further, I don't want to say out of the money, but not as deep in the money, which would allow us to maybe target something above 65, maybe 60. That's 67 we're talking about. So let's start there. Now, I hope you guys know that I am just talking out loud. Look, here's the debit. This is between the midpoint 166. Just off the top of my head, that's probably 3 contracts. Maybe less, maybe 2 or 3 contracts. We'll see. So let's analyze it. Why did I say that? Because I'm just going off of the my max gain, max loss price. Let's go back to expiration. There we go. Okay, so now we just take a look at it. Here is, $62. It moves up. Looks like we're going to risk, obviously, the $1.66 to make the difference, which is $5, $6, $7, $2. So, or $5 minus $1.66. So that's not bad. Pretty good. Risk reward is 2 to 1 ish, a little bit more maybe. So I like where we're at there. Then you just kind of manipulate it. Go back to the chart. 67 might be a little high. Let's see if we target maybe 65. So I'm going to go and switch this down to 65. And this is all I'm doing. This is all you guys need to do. Okay, let's take a look at this one. Substantially cheaper, which means I could bump it up a contract, right? Yeah, okay, so $1.15. Target up here of the 65, which is $3, $1.15 to make $3 is great. That's a good one. Yeah, I like that one a little bit better, to tell you the truth. I also like it because it's 65 targeted, not 67. So once you find, I should say, a trade that you can get behind, and that's all that matters, because you know what? If the stock goes to $67, oh well, maybe you should have done the 67, the 62, 67. Who cares at that point? You know, if the stock goes to 50, well, oh well, I lost my $500. So just get behind something that you like. All right, so we're going to go with this, but here, let's go ahead and try to analyze this again. Unfortunately, we don't get to the expiration cycle because of the odd day that we're on, but it's that same graph. So this bad boy hits that 65 mark. Look at the difference. And you can see, look how steep that comes. You know, how steep that curve gets. Now this curve, it's like, well, geez, I'd make a lot more if I went up to 68. Yeah, you won't. I mean, because it's going to stop you once you get to 65. This is going to flatline. Now, why this curve does this is because it's telling you, with the volatility based on its expectations from the current Greeks, that's where it's at. There's no way they're going to pay you more than the spread's worth, so keep that in mind. What you need to focus on is the differences in the steps. The last few days are outstanding, amazing. So if there's anything you take from this class, besides me just walking through some setups and blabbling, is how important it is to be as close to your time as possible. Let's go ahead and buy this one as well. Why not? It's kind of fun. Let's create my duplicate order first so I can see, yeah, 108. That's okay. We're pretty locked in here. Confirm and send. By the way, those spreads are pretty wide. One thing I do like about, the combo spreads are pretty wide, which they should be most of the time. We're trying to buy and sell the options at the same time. So keep in mind that the Thinkorswim platform is very, very giving when it comes to demo entries. You'll find that they'll give you almost any price, which is the exact opposite of the Trader Workstation, which is pretty rigid, and I've had market orders never fill. Keeping that all together. All right, let's go ahead to go to our monitor tab and see which ones we have. I know we got the one. Oh, looks like I do have some residual trades from past classes. But yeah, so we're trying to work this one here. This is our $1.08 bull call spread, and we've got ourselves our bear put spread already in Baxter here, 77.5, 75. Looks like we got that thing for 64 cents. Oof, nice. We'll take it. That's a good one. Oh, looks like I got a kind of a question here. I can expect to move as confirmation. If they are closed, then I have more confidence in my projections. Look at that. Okay, it's a good comment, Neil. Once I determine my time frame and target, I look at the expected move as confirmation. And that's an awesome thing to notice. And let me talk at that since you brought it up. Thank you, Neil. One thing that I love about the Thinkorswim platform, and let's go ahead. I'm in March, right? So if you go over here, I'll get my little pen. You can use this expected plus minus. So I think we had a target on this. What's our target? Well, it's right there, 65, 62, about $3. It's expected to move $4.98 by the expiration cycle. And what Neil's saying is I use that to build confidence in my projections and kind of confirmation. It's awesome. I didn't even really think about that, but that's a good place to say, hey, I'm out of whack. I put a lot of emphasis on my charting. Taking this into consideration, a target of 67 still would have probably fit within this criteria. It goes $5 plus 1. That's 66.89. That's pretty close to the 67. But you can see I feel a lot more confident with the $65 target, knowing that it should be well. That this is projecting that it should be well over $1 past that. So hey, thanks for bringing that up, Neil. That's a fun point. All right, cool. Well, we're not really quite filling on this yet. It doesn't make a difference. That's not part of the class. The idea was just for you guys to see how to build these, what to look for, how to compare them. And once again, when Rob said we were going to do this lab, I said good, because the only thing I want to emphasize is how important it is to be correct on your time. Even if you guys miss your target, you're over by $1, you're under by $1. I don't care. That's fine. You miss your date, you're in a it's just so frustrating because what happens is it gets there and you're at max gain, or you should be at a point to where you need it to decay a week, and then it pulls back. And you guys have if anybody's got experience with this, you'll know what I'm talking about. So go out and test these. Do 100 of them. Put them on. A lot of traders. What I suggest is put two different ones on the same stock. Do the wider one and the shorter one. See which one you like the most. Do a longer time frame, shorter time frame. You're going to find this nice area where you're comfortable. It turns out that we're about, both of these had weeklies. They're 8 days away. There's a lot of traders that just won't do that. That's too soon. But the next choice, I believe, let's get to it, was a lot further. 8 to 15. So 15 might be a better place for you. 22. So the idea is find a chart that you can get behind, find the time frame that fits that chart, and then put the combo on that works. Obviously, the more choices you have, the more opportunity you're going to have to trade, but don't force it. Too often do I get traders that come out and say, hey, you know what? I will only be in this for 8 days, but it only has monthly expirations. Like, okay, well, you have a choice of 15 days or 43 days, just taking a look at the chart in front of us. No. Do a different strategy. All right, guys, I think you've heard enough of my billowing and blobbling. So keep that in mind. Hopefully you enjoyed the lab here. Hopefully we didn't go too far in time, but I really wanted to spend the time to talk about this topic. It's a good one. All right, if you have any questions, please reach out and ask. Other than that, we'll see you next time. Thanks for joining me. Bye, everyone.